Welcome back to my YouTube channel. So in this video I'll be showing you guys how to trade the flip zone strategy. Alright, so first thing, one of the things you need to understand is demand and supply. So the price of goods moves as a result of higher as a result of the demands of the goods, and also the price of goods moves lower due to the supply when the supply is high. Alright, so for example, the market keeps on moving down from a supply zone, from a supply zone, from a supply zone, and the market will change direction because the demand of the goods or that price of that asset starts going up. So there are various regions like this. These are the supply. I don't want to go into details too much, but these are supply zones. And so when you see that price comes into a supply zone, instead of continuing the trend, fail to take out this old low, and now come forming a failure swing. All right, failure swing, forming a new higher low, forming a new higher high, causing a change of character to the upside. Then we'll say that this market has formed a supply to demand flip. All right, so this zone will be buying from this zone to this up. All right, same thing for the opposite trend. If you see that the market comes into a demand zone, fail to take out this old high, all right, coming down, we'll be selling from the supply zone. Same same thing like this. All right, so um this is the change of character. So these are the things you need to know. So you need to understand your structure, your demand and supply, and also then know when to pick your supply to demand flip or your demand to supply flip. Okay, so let me go to the chart to show you some examples. All right, that I did. So the first one here is this. So we saw that the market was going up here. All right, came into this demand zone after a long time, failed that demand zone, and now here's the supply. You can see the supply. We marked it here, right? That's the supply, and when price got there, we sold into this new low. All right, into this new low. So we sold from that place to this place. All right. So another example is price forming series of lower low, lower high, lower low, lower high, lower low, lower high. Then instead of price to continue the downtrend, it failed um, that supply zone, leaving a demand zone to buy from. So we bought from this zone and came up. All right, so that's how it is. And also, there's another example here. If you can see clearly. So you need to train your eyes to see these things. All right. So you could see the. Let me take this out. You can see the candle, this opposite candle that caused this, that retraced and went up, and we marked that as zone and bought to the zone. So it's everywhere on the chart. It's everywhere on the chart. If you can train your eyes to see them, then you appreciate. All right. So we saw this push to the upside. Then price came into that demand zone. Instead of to buy continuation of the trend, it failed that demand zone. And what happened? We came here again and we sold to this point. So this is how it is. This is your demand zone. First of all, you check your structure, you mark out your demand zone out. When it gets there, when it fails, mark the supply zone. All right, mark the supply zone and sell from that zone into the new low or high that was formed. All right. Also, let me see if we see another one. All right, so go to your chart and practice these things, learn these things. All right, and if you haven't subscribed, please subscribe, like, share, and follow for more educational content. And also join our live session on Sundays. And God bless you. Like, subscribe, share. See you on the next video.